Hi everyone, in this video I'm going to answer the question, is Macy's an excellent dividend stock to buy following its third quarter earnings announcement? So let's get right into the figures. So Macy's has maintained inventory discipline despite the wide fluctuations that's occurred in the segment over the last, I would say, 18 to 36 months. Overall revenue for Macy's decreased by 3.9% in Q3 to 5.2 billion. Earnings per share decreased to 39 cents from 76 cents in the same quarter the prior year, mainly due to the gross profit margin falling to 38.7% from 41% year over year. Of course, the company benefited over the last, I want to say, year and a half because inventory shortages across the industry was allowing retailers to sell apparel and other items at full prices without needing to mark anything down because there was hardly any inventory to be found. People were going into stores and finding out of stock everywhere, and so companies like Macy's didn't need to offer any discounts. They were able to sell everything at full price. That's no longer the case. The industry has turned around. Several retailers are finding themselves with inventory gluts. That's including Walmart and Target have way too much inventory on hand. They've started to slash prices, and so that's increased the promotionary environment in the industry, and that's impacting Macy's as well. However, Macy's has done an excellent job keeping its inventories leveled. Inventories were up just 4% compared to the same quarter the last year, whereas companies like Target and Walmart have seen their inventories up more than double digits year over year, and some even more than that. The decline in gross margin was driven by the increase in promotional activity I mentioned earlier and markdowns, but this was offset by lower shipping expenses because more people were shopping in person instead of shopping online and having the items delivered to their homes, which people that shop in person give Macy's higher profit margin sales. SG&A expenses rose 300 basis points compared to the last quarter in 2021. This was mainly due to the company filling jobs that were left vacant because they couldn't find employees that were willing to work. Macy's had relatively skinny staff levels compared to normal levels before the outbreak. They were operating at much fewer staff than usual, and so that was creating higher profit margins as well. Now that staffing levels are getting normalized, that's putting pressure on operating profit margins as well. Still, SG&A expense as a percentage of sales has improved 330 basis points since 2019. So comparing to pre-pandemic levels, Macy's has improved the SG&A expenses. Of course, if you're not aware, right after the outbreak, when Macy's had to shut down its brick and mortar stores, it underwent a significant cost-cutting program, and that allowed it to shave off some unwanted or unnecessary expenses. And now that's put Macy's in a better position that sales have rebounded. The company is able to deliver better profit margins overall. And that partly allowed Macy's to raise its EPS outlook for the rest of the year. It raised the earnings per share guidance to $4.17 at the midpoint. That was up from the previous outlook of $4.10 at the midpoint. So, overall, a really good quarter for Macy's despite the challenging macroeconomic operating environment, competing with all of these other retailers that had inventory gluts and were having massive promotions and markdowns. Despite those headwinds, Macy's was able to deliver a solid quarter and raised its earnings per share guidance for the year. So, great quarter for Macy's. And so, to answer the question if Macy's is an excellent dividend stock, We look at the earnings per share because ultimately dividends are paid out of earnings. And if earnings remain solid, then dividends can remain solid. And so looking at Macy's, the big theme here was the raising of the earnings per share outlook for the entire year to $4.17 at the midpoint from $4.10. This was a double benefit because investors feared that Macy's might lower its outlook because of the heavy promotional environment in the industry. But not only did Macy's reiterate, it raised the guidance. So that's great news for earnings, which is going to be great news for dividends. And so if you're a dividend stock investor and you're looking at Macy's and asking yourself, is it a good dividend stock to buy? I would say yes, Macy's is an excellent dividend stock to buy right now. Management has proven itself over these last 3 years during the pandemic and the ups and downs. They skillfully dealt with the challenges and have came out on the other side in a great position. And so I would recommend Macy's as an excellent dividend stock to buy. All right, if you've gained any value from this video, please go ahead and hit the like and subscribe button. It'll help me make more videos like this one. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.